Yeah, so I've also been really enthusiastic about embedded insurance,
Yeah.
right? And the shift from what I said B to B to C to B to B to C, but the difference is it's going from a broker to a business in that middle B there,
Mm,
which sort of starts to unlock things like the neo banks and other channel partners, right?
yeah.
Becoming a new type of distribution, right? Replacing I'm not as much of a, despite being a guy who sent out direct mail by the truckload, I'm not a, direct consumer is going to completely swamp the agent, but like
Yeah.
you have the sort of different type of middleman in there, right? Can actually be an interesting impact. And I think that's playing out. I mean, actually, uh, 2 years ago, a year and a half ago, I presented about invisible insurance. Like I had a slide
I was
about
going to ask you
invisible
about
insurance.
this. Yeah.
What's that?
I was going to ask you about invisible insurance.
Yeah, so I look back at my presentation from 2019. It had this extending the notion of embedded insurance all the way to invisible. And I will admit, I didn't entirely know what I meant by that.
Okay.
like, I think it's an interesting idea. I think it's just something, but I hope no one really asks me about it because I don't know what I mean. And
Sounds like a
thankfully,
thing.
well, sometimes you do need to trust your gut, right? That there's something there, even if you can't provide the rational component to it yet.
Hmm.
Sometimes the rational part of your brain needs to catch up to the instinctive piece. So thankfully, I think the rational part eventually caught up for me to my instincts. So I've now got a framework which actually puts invisible insurance in some context.
Okay.
Like embedded even is a little bit more subtle. Like there's the notion of a soft embed, right? Which is tied to making it an opt-in. Right? So you're, in the checkout line at Best Buy. Would you like this warranty on your new TV? That's an opt-in.
Yeah.
It's a soft embedding, very powerful. It's very efficient for distribution. What it's not good at actually is if you are subject to very, very bad adverse selection, then even a sort of soft embedding opt-in is really vulnerable. It may not work well. Now that's in contrast to hard embedding, where it's an opt-out.
Okay.
And that's a lot more unusual, right, for that kind, because it is a sort of stronger push, stronger nudge, of course. But it's really important where the product is subject to adverse selection. Right? I'm an old risk guy, and so probably the best example is in the sort of renter's insurance that replaces the security deposit.
Yeah.
And then that takes us to invisible, right? Where if I tie this nomenclature to like, you can't even opt out.
Yeah.
It's neither opt-in nor opt-out. It's just there, right? Invisibly built in, invisibly embedded. And you think, well, surely that must be rare. Like that's a really strong. And I think it's actually very common. The issue is it's invisible, so we're not used to seeing it.
Right, right.
So when you buy a new car at the Ford dealership, you can't say, well, I know that the warranty, right, is part of what I'm paying for. In fact, Ford actually has to take reserves for it in advance. So there's actually a price to it. You can't say, if you take $300 off the cost of this car, right, I will sign a complete waiver and never do a warranty claim in the next 3 years.
Right.
No, you can't opt out.
Yeah.
When you go to the doctor, right, you can't sign a waiver that says, I will not sue you for malpractice, right? Reducing, therefore, your malpractice insurance, right, expected cost for this visit. No, right? You just can't opt out. And so it's actually, once it gets to that point, it is invisible. It's not even necessarily drawn out as a separate line item, but it's there and it's
baked into the economics.
Yeah. I'm Caribou Honig, and this is the future of insurance.